And I sit there and go like, you guys see all that traffic for like hundreds of miles right there, just sitting there doing nothing? I said, if trading was so easy, why aren't those people home trading?
Welcome back, traders. Always super excited to welcome you guys to this channel here at TradeDelicious. We're incredibly excited to introduce another new segment here where we're going to be discussing a variety of topics valuable to traders worldwide, whether you're day trading, swing trading, or long-term investing. We hope that you can get some value out of this. We're bringing back two people that you know and love quite dearly from the beautiful shores of Melbourne, Australia. We have the Jordon and
I
the
feel like
Don
running
Dawson.
into like the blue corner. Like, come on, give me some raps. No, it's good to be
There
here.
you go.
It's good to be here.
Jordan's a superstar now. He was on stage in London and places like that. I mean,
Right.
we should be bowing to him or tipping our
We
hats.
should.
Your words.
We should.
Your words.
I'm very excited to get the autographed book, but he hasn't finished writing it. Where it's in the works. So gentlemen, I was super excited to talk to you guys. We talked a little bit about this before, but this whole idea of losses and dealing with losses, especially right now. I mean, Don, you and I just talked about it not too long ago. This market's a tough market and it's choppy, and a lot of traders get chopped up, and it's really easy, especially from a day trading perspective, for you to have a great idea. I was long the NASDAQ today. The NASDAQ didn't care about what I wanted to do, and it chopped me up on several occasions, and I had a couple losses in a row, although I was right on direction.
Yeah.
That's just the nature of the beast. Yeah. So when you think of day trading or trading losses in general, I know you're more of a swing trader, John. What comes to mind as tips and tricks that you've learned or experiences in the past?
Here's my number one tip on losses. And it's not so much about, I don't have the money anymore. It's about what do you do with your trading plan after losses? See, the natural habit is I got to go fix it after a loss because everyone wants to blame the trading plan. And I think that's something you have to really guard against, because you could have a great trading plan. And we've talked about this before, and I think it'd be a great segment in the future as well. And that is how every trade is random that we take. Literally each next trade that we take is a 50-50 chance, regardless of what our edge is in the market. It's over a series or a large sample size of trades is where our edge comes from. So what a trader has to guard against, in my opinion, and I think this was a big lesson for me, was just because you have a losing day. For example, in your case, Aaron, you wouldn't want to, after we get off here tonight, I don't want to catch you sitting in your office going, I got to change my trading plan around this. I should have done this. I could have done that. Because that's just how the ball, I got an old thing, excuse my French, but I just say shit happens, like that. And that happens in the market. Just like you said today, the market went in the direction you wanted it to go, but stuff happened in between there. And that's what we've got to learn to deal with. And we don't go in and mess up a good trading plan in the interim.
Fair. Always words of wisdom, Don. When's the last time you had like have you ever had a bad losing streak? Well, you have, of course.
Oh, yeah. And the problem is it was so recent that I get like chills even thinking about it.
I was going to say, I was going to butt in here. I was like, Aaron, touchy subject. I've been down this road. No, you had like a bad year, didn't you, Don, recently?
Yeah, it was actually a bad year for me. So I was coming out of I don't know, maybe some people haven't heard about it. I was coming out of a back surgery, a spinal fusion surgery, and right after COVID, actually. And when I had that, I got that. The back kind of started acting up in December, January, and then I had the surgery in March. So from January through March, I really couldn't even sit at my screen much. I, to do my analysis, got me sitting down for about 5 minutes, and that was it. So I really didn't even get any trading done in the first 3 months of it was 21, I think it was 2021. And so in March, I had the surgery, and I couldn't sit. They said, no, we don't want you sitting for any more than say 5 or 10 minutes at one time. So I had to keep moving and walking. So I couldn't do anything for about 8 weeks after that. There's another 2 months. So then when I came back and I looked at it, what my stats were so far, I'm halfway through the year now, and I'm looking at it, comparing it to like even pre-COVID. I'm going, oh my God, I have got some catching up to do. And I am a swing trader. I know I suck at day trading, right? But my answer to fixing this was to be a day trader for the next 6 months. And why? I have no idea why. That stupid idea, because all I did was go boom, my equity curve just did this. So by November, I just pretty much, I said, you know what? I am done. It wasn't anything like millions of dollars or hundreds of thousands. It wasn't that stupid. I didn't get that crazy. I didn't get revenge trading. I was very frustrated, very upset with myself because I did day trade to try and make it back. But it was in November, I realized this isn't working. So, and normally for me, November around Thanksgiving, which is like the third week of our November for us, from there until the end of the year, a lot of the like managed money, hedge funds, institution traders kind of shut their books down. So there's not a lot of great trends or great trading, good day trading, but between then and the end of the year, not a lot of activity. So if you haven't had a good year up until then, you're really foolish thinking you're going to make it back from November, the end of November through January, because that just isn't going to happen in most cases. So I stopped there and I started going back. I set up all my spread trades. I started going back on my daily. I took all my intraday charts off of my screens. So I got like 5 monitors and I had 60 minutes. I had 15 minutes. I said, delete. Everything now is daily, weekly, monthly. Went back to that. And I just started setting those up. I did a little sim trading, if you will, from November through the end of December. I felt like this is what I need to be doing. So when I hit the ground running in January, I was, boom, things started running for me again. But it was just that stupid notion that I had to catch up, after 6 months of really not trading. And I put that pressure on myself. And I just really underperformed like crazy. It was so bad. But I was doing something I know I'm not good at.
Yeah, I love. You don't know this, Don, but I use you as an example for this. When,
if you need to lose, I'll take it.
Because when this exact topic we're discussing here, right, handling losses in trading, and we've talked about edge, we've talked about becoming a successful or profitable trader, and that a lot of people think it's like a uni degree. Once you reach profitable trader, that's it. You're set. You're happy days. You're going to make money the rest of your life. It's not. It's like peak performance athletes. If you stop training, you're done. You're not going to win any awards anymore. And I use you as an example because that year, that would have been what, your 33rd year?
33rd, right? Like 33rd, 34th, yeah.
33 years into profitable trading, and still managed to make that mistake and fall into that trap. And that's just the perfect example for everyone at home. When you think, I can do this, get there, and happy days, I'm going to go live on a yacht. It's not quite the case. You still have to be very switched on, and you have to be doing this for the right reasons, because it's going to take a lot of time.
Yeah, right. No, I think that's a great idea. And it just, you really, and another thing as a trader too, and I've learned this the hard way over the years. And it's one thing I was growing up, my dad always said, for every time you make a buck, put a few dimes in the bank for a rainy day. And if you think of the trading industry, if there's ever an industry that has a rainy day chance, it's going to be trading. So I did do that over the years. I just compounded. Like, just because I made money on trades, I didn't go buy toys or any nonsense like that. And so, I'm a very sort of grounded person. I live within my means. I don't try and have to have fancy cars or anything like that. So really, it's just by saving that up, that's what got me through without the addition. Because if I had that stress, if I had to have the money to pay bills, to trade, to make money, I probably would have, what do they call that? Go tilt or whatever they call that. But I didn't because I had those resources to fall back on. Trust me, I did not like using them because I said, this is emergency money, right? And I felt like this was an emergency. This was stupidity. So I didn't have to use it. I felt like I was paying tuition for stupidity is what it was.
I'm very similar in that aspect. I look to do the same thing. Most of the money that comes in makes it to the bank account. I do not let it leave. It was actually only yesterday that I decided to reinvest some of that, because I realized my emergency fund got a little bit too big for what I actually needed for an emergency. I was actually wasting time. You don't want money just sitting there. But I'm very much the same.
It's a beautiful, humble brag. My goodness. That's how well Jordan's doing, ladies and gentlemen. I told you about the Ferrari. It's on the way.
Come on.
It was an emergency Ferrari. He had to get rid of some cash. Don't worry about it. I'm sorry, buddy.
Oh, Lord.
Outrageous.
No, that's a good example, though, because it's like, I know some people use like a 3-month rule. You should have at least 3 months of reserves saved up. If I only had 3 months saved up, I'd have been in a heap of trouble, is when I look at it. So I'm all about it. Now, when I've got that money in reserve like that, it's always working. It's not just laying there and doing nothing. It's always in something that's very, very liquid, so that at least it can be compounding a little bit while it's sitting there. So
that's the move I made there. I've taken it from an interest account of like 3% per annum, and I've gone into ETFs and diverse that way. So it works a little bit more for me, because you don't want it just sitting there at 3%. it's not even keeping up with inflation.
Yeah, and what I'll do is I'll keep like maybe about 2 months of just pure cash, and that would cover me until if I had to take the money out of the other liquid things I've got them in, that I got 2 months to get it back, right? So you don't want to be next day I got to have that kind of a thing. So
100%. And Jordan, I meant to ask you as well, my friend. So I know that Don, you use like T-bills as a way to have very, very liquid assets pretty immediately. Have you kind of diversified into that space as well, Jordan, or are you really just ETFs, long-term fund, trading fund?
Yeah, pretty much. Like day trading account, which is my main, where realistically I put the most. But what I don't like, and especially I've noticed this as time goes on and I get a little bit older and especially the calendar gets filled up a little bit more, is how reliant it was on my performance. And that pushed me recently to go, okay, I need to diversify up. So even if I can't perform or if I go through spinal surgery like Don, I'm not going to find myself in a hole come the end of the year. I really want to spread that out a little bit. So over recently, it's been a mix between building equity portfolios here in Australia into the ASX and the companies that I'm surrounded by and I know quite well, or into those global ETFs, which is, I'm talking 10, 20-year outlooks here. I'm not looking to make, this is my day trading account is for the short-term gains and all that type of fun. My investing side of things, I'm quite young. I've got a long way, touch wood, a long way ahead of me. It's all about setting everything up. So in the future there, I've got everything I need.
Thank you. Thank you for reminding us of how young you are and how old I am.
Don, I'm glad you got the message.
What Aaron already telling us.
I really wanted to highlight that.
Right. There was no mention of age there. We all love that Don's been trading as long as he's been alive, 35 years from the womb. It's amazing. But I think that's so important. The idea that as traders, we don't just have the one source. In fact, a lot of the biggest traders that I know personally, that I've heard of, they oftentimes venture into other businesses because, to be frank, sometimes you have a rough drawdown. And most of the time when you're looking at these outlooks, you're looking at guys that are saying, I had a really good month this month, but next month may not be the same. So you have to keep some in reserves.
There was a video on YouTube that was out, and I'm trying to remember the guy's name, but he was with a Goldman Sachs firm. Really, I call him an arrogant kind of a guy, but he's just so good. He just comes across like that. But he was doing one, and it was sort of like they were in a restaurant. There was 3 or 4 guys sitting around a table, and they wwere talking about this. And it was something about breakfast with, I wish I could come up with his name. But anyway, they were talking about that, and he was talking about the firms who, like the Goldmans and all these big firms. He says the best traders in the world always had that supplemental income coming in from, in other words, the institutions were paying them a salary and then they were trading, because they said it took the pressure off of them. And that's what made them such good traders. So, we're talking at a level like, a high level of trader. So, for a novice trader to come in and think they're going to quit their job and just, be able to handle that stress of making money every day to pay bills, it doesn't work like that. I don't care how good you think you are or how good your simulated trading was. It doesn't work like that. You've got to have some money coming in while you're trading, in the beginning especially. And I'll tell you, it doesn't hurt. And even those guys he was talking about with the institution, they did not stop collecting a check just because they made $6 million or whatever the first year. They kept on getting that check. And basically, when you're doing that as well, you can keep piling that money into your account and compounding position size. Think about it. If you're a trader and you're taking money out every month to pay your bills, you can't compound your your size anymore. You're going to be stuck at that same plateau for the rest of your life, right? And then the sad part of that is you have a drawdown. It's going to be, a baby step up, trying to get that money back. But when you can compound, and now you can do 3 extra contracts now because you got that extra money, boom, you've covered 2 or 3 losses real quick. When you do that,
I can attest to that.
That was a winning trade.
Right.
I can attest to that too. Things we've seen at the firm. Some of our best traders are the ones that also have jobs. And people think that if you quit your job and you focus purely on trading, especially day traders, because I don't have the time to be in front of the chart, it's a load of, right? You take the pressure off of not needing to perform, you will perform. You're more relaxed, you're more calm. There's none of that added stress on your shoulders. When you go into those drawdowns, you can calmly get yourself out. And then you can also live your life. You can fund everything around you through your job, or I'm talking to more beginner traders here who aren't in the professional setting of institutional firms. But we've seen that at the firm. I've heard that, as you've just said, through Goldman Sachs, their best traders salary too, and that's why I've seen the Fivers recently launched a new program which gives traders the salary too. It's the same thing. If you can relieve the stress of performance paying you, you're able to then sit back and actually work on performance and not worry about the outside factors.
And traders coming into this thinking it's going to turn into a career, one of the major things they've got to remember too is balance of life. Okay. And just like Jordon was saying, you don't want to sit in front of that screen all day long and, vegetate, because you're not getting anywhere in life like that. Okay. So you want to have a balance in life. So you want to come in there, because if you're only coming in for a few hours a day, imagine how much more vigor and how fresh your mind is, your body's, you're ready to roll for just a few hours. But when you sit there for 8, 9, 10 hours, the body, especially if you're sitting for a long period of time, the blood starts to settle down everywhere and you get sluggish. Your mind starts to get sort of slow. And that's when your mistakes are going to start happening. So if you can just come in when you're sort of like, what do you want to call it? Like it's sort of like a racehorse, it's kind of like his first race of the day. He's going to be super good. But if you keep running that horse around the track all day long, eventually that 4th or 5th race, he's not going to be able to get out of the gate. And the same thing's going to happen in your trading. So I think the balance in life is super important. Not only that, because you got to be thinking, if you come into and you kind of marry trading, that's going to have a huge impact on your personal life, especially if you're in a relationship of some kind. Your health isn't going to be, appreciating that kind of a thing. And just getting out and experiencing new things. I know, Jordon, I think we've talked about this once before, but I know we go to the gyms and stuff like that. But half the time, some of my trading ideas come when I'm out doing something else. Like, hey, I think I would try that. You get home and you think about a pattern that pops in your head and you go home and you start looking at charts over that. But when you're sitting in front of the screen and you're trying to find patterns to, I need a pattern, it just doesn't seem to come that way. Right.
It's the little things.
100%.
It's true. I recently sat way too long on a plane, and every time that I was just sitting there, not having access to any markets, just kind of sitting there pretending to be asleep, it's just little ideas would pop through my head and be like, why haven't we done this? Oh, we should do, and not, that doesn't just go for trading; it goes for everything. But
everything.
It's true. Totally. You're getting away from it and getting a different perspective, but also taking that break and resetting your body, resetting your mind. It can do wonders. So sometimes the idea is just shower thoughts, right?
Totally agree. Yeah,
200%. And I think one thing that really excites me about having both of you here is the fact that both of you have taken on these different experiences throughout your trading careers that have added real color to your trading. I don't know if everyone really knows this, but Jordon is he's very humble about it, but he's decorated as a trading coach for the Fivers and for Trade the Pool, and he's helped a lot of traders become better traders, right? And of course, Don's done classes all around the world. I imagine that aspect of having this kind of experience of being able to give back and do other things outside of your own trading also help you deal with those really bad drawdowns. If you're in a drawdown and you're just one person, that's tough. But if you're in a drawdown and you can use this as a learning experience for others to take from, kind of takes the edge off a little bit too, right?
Well, it does, yeah, because you feel it's almost like you're, how do you say it? It's almost like, because every time we have a loss in a trade, it's like education. You're paying a tuition, right, to become a better trader. And so if you're sharing that, it's almost in the same concept. If you're sharing that bad experience with somebody, hoping that they don't have to go through it, which they probably will, but they'll be more aware of it quicker and maybe don't have to go into it as deep as you did, then it's almost like, some of that tuition I just paid on that loss is going into that as well. So that's a good point you bring up about that.
I always find it funny, and sometimes I think I upset people because I end up laughing when they tell me something in these sessions. Right, they'll be asking for a bit of help, and they'll tell me what they think the problem is. It's usually pretty easy for us to identify what the problem is from an outside factor than from an internal factor. So they'll come through and they'll tell me exactly what it is, and they'll find me smiling or laughing. And I'm not laughing at them. I laugh because it's literally me about 5 years ago. And I can see when I'm talking to these people, I'm like, I was in that exact same spot. I know what you're thinking. I know what you believe the issue is because I've been there and I had to get through that. And that's fun to do. Now, we can tell people a million times different things that's worked, whether they listen or not, that's up to them, right? And that is, but 9 times out of 10, especially, I mean, every week I'm sitting down with at least 2 traders going through their trading, getting an understanding. I can tell you right now, 9 times out of 10, it's the same conversation over and over again, unique to the people, but the actual situation and the work that needs to be done, it's the same. Right the way across the board. It's the same stuff. It's the same answers. Everyone's unique in the way they go about the process, but the fundamental work that they need to do, it's the same stuff.
Well said. Yeah, that's well said. I've seen the same thing over my 15 years, it's just of teaching. And it, it's like kind of you come in on the first day of class and, you had to be sort of Mr. Dark Cloud because when they bought these classes, they thought everything was going to be like, oh, this is going to be easy money kind of a thing, And so, of course, first thing on Monday morning, I got to bring it in there going like, okay, now let me just tell you why this isn't going to be easy, And it's one of the things I used to like to do was walk to the back of the room if we were up in a high rise and, you look down, there'd be an interstate or something below you. And I'd sit there and go like, you guys see all that traffic for like hundreds of miles right there, just sitting there doing nothing? I said, if trading was so easy, why aren't those people home trading? And you can hear a pin drop after you say something like that. And all of a sudden now you got their attention, okay, well, maybe this isn't going to be so easy, So I think that's one of the things that traders really, they got to kind of realize this is going to be the hardest, easy money you ever make in trading. It's just, you are going to work yourself to death and not just for a while. This has to be a life commitment to education. Educating yourself doesn't mean you have to keep taking classes, but you've got to be committed to wanting to learn day in and day out when you're trading. For the rest of your trading career.
Yeah, let's have some fun.
Absolutely.
Aaron, let's flip it on you here. Let's have a look. We're talking about dealing with losses, right? So walk us through. Is there a loss that rings in your ear in your career that was an issue, or you struggled to get through, or anything along those lines, and how you went through the process of getting over it?
Well, it's very much so like Don, right? So it wasn't necessarily a single trade for me. It was more just a drawdown period. So I remember, probably 2020 at the very beginning of the pandemic. Things were going ballistic, right? There was a moment in time, I believe, like the largest drop of the day. I can't remember which day it was in March, but I was short the NASDAQ, and I got like. It was preposterous. It was like 400 points or something in a trade. It was absolutely ridiculous. And when you're trading like that and you're day trading, and my style has always been quite fast, as very much so like you, Jordan. As I've gotten older, my style has slowed down a lot. I've considered a lot more swing trading, but especially then, we're still young in the game. I'd only been trading for 3 years at that point. And so I'd never seen price action like this. So I was doing incredibly well, and I made, half of my yearly salary in like a couple weeks or something. It was ridiculous.
Mm-hmm.
And I lost damn near all of it in like the following week.
Oh.
And it's just, and that's just the nature of that's the nature of the beast, because, I think one of the beauties of this channel and experiences like Don's class, or experiences like working with the Fivers or trade the pool, is this whole idea of having a bit more of a community. I was a person in a room with 2 screens, and I was the best because I had made all this money. I held this incredible short. I was Jesus. I've been brought back, the second coming, and so. I got really arrogant, and like Don said, I paid tuition.
Yeah.
I paid tuition in the way of losses. So when I think about losses and drawdowns, that week comes to mind for me. And over time, it's gotten a lot easier to deal with losses as a result. One thing Don talked about as well in a few videos back for us was he talked about this idea of like, and quite a few people have also talked about it. Saul from the Fivers talks about it too, where when you take a big loss, it's an emotional thing that you think, you know what, I don't want to go through that again.
Yeah.
So you put things in place to help you to remove that possibility, right? When Don talks about his drawdown, right? Your risk management gets a lot better. Obviously, if Don's not trading well for a year, you didn't hear Don say, "Oh, I had to go back and be a carpenter for a few months." Right? He didn't.
I wouldn't work in a fast food restaurant after a while. I was going, because I could figure out what I'm doing now. I'm not knocking fast food right now. Just the first thing popped in my mind. But I was like, yeah, that was bad.
Right. And I think that's the biggest key, just trying to recognize the fact that during these drawdowns and during these really big losses, one of the easiest ways to deal with it is to have prepared for it beforehand. Because the reality of it is you have no idea when this stuff is going to happen. It's random. We are making our way out of the pandemic now, sure, but who's to say that something else doesn't happen within the next few months? There's always something that happens, and it changes the trading conditions. It changes the way that we trade, changes the way that we think about markets.
Right.
And so when I think about losses, those are the things that really come to mind for me. What an experience!
I just wanted to tuck you under the spotlight there. But no, it is. It's not just an emotional roller coaster when we get these. It's physical too. I mean, I don't know about you guys, but I've had some absolutely horrific losses in my time, and yes, they're learning curves. Sure, we'll call them tuition. I thought it was a bit expensive for tuition, but sure, we'll go with it. And yeah, right. It's a physical thing. That fear of getting back in the market is real. I mean, you can have performance to show that, hey, you're doing the right thing, you're in the right space. But coming out of one of those losses, it took me about 3 weeks to pull the trigger again on another position. And that must have been the smallest possible position my broker would allow me to open. It's tough.
I think that's an interesting thought you're doing on that, Jordon, because it's got when you have a loss like that, it mentally scars you. And now, like you said, you came back. It took you through 2 or 3 weeks to get back into the game again. But I guarantee while you were even in that small trade you're talking about, you had voices in your head going, after you had a couple of ticks profit, you start going, remember what happened the last time? You better book this profit long before it gets to your target. You know what I mean? But you start hearing these voices, right? Or you got the 2 people on your shoulder. You got one over here going like, hang in there. The other one going like, get the hell out. Yes, I go to see a psychiatrist regularly. No, I'm just kidding.
It's called TradeDelicious.
And I think that's a big deal for all of us. My little angels are profit and loss on each side, and they're just constantly talking through their own experiences. We've had this profit before and we lost it. Just take the 1-to-1. Take the 1-to-1. Yes. And then the lost guy on the other end goes, hey, this is a bad loss, but it can come back.
Yes,
it'll come back. It's an up market.
Yeah, I get that heavily in day trading too, but it's not as much as like don't take the position or you're risking too much or you should be risking more or anything like that. What I find is the devil on my shoulder, and this will relate to a lot of the day traders that are quick in and out, like I do, want to be in and out of the market very, very quickly, is it's a delay tactic. So he won't question the position size. He won't question everything else. It'll be more of a double check. Double check this is the right thing. And all of a sudden you spent 5 minutes double checking, the move's gone. And you're like,
yes.
So it's not always as simple as don't do this, do this. Sometimes you can pick up on who the devil is and who the angel is within you. Sometimes you find that you're a little bit hesitant. I've found that over the past week right now, I think I'm still way too hesitant what I should be. I've been out of the market for about 3 weeks. I've come back and I've really struggled to get back in. The confidence is lost with being in tune with the market, that when I go to executing a position, it's going, are you sure? I'd be like,
that's your intuition, though. That's your intuition, Jordon. You had great intuition before you left on that vacation, but intuition isn't something you come back and turn a switch on and off. That takes something to get back. You gradually go back in, especially for the time you were off. So that is not uncommon. I've heard that over and over. I've done it myself, and if I didn't go away for a week, it's like going to the gym. You take a week off from the gym, and man, you like that 7th day, you feel like a bowl of jelly. You know what I mean? It's like, but you go back in the gym and put away the weights, you feel like you've never I've done this before. Kind of like that. But it's the same things in trading. You can't just start back up trading and thinking you're going to be where you were the day you left trading. That intuition has to kick in.
Absolutely.
100%. It's so hard sometimes for us to recognize that. There's also different aspects of seasonality. I mean, Don, that's your calling card, right? Right now in the markets, it's choppy, not just because of all of the macroeconomic conditions. It's summer. The guys are going on vacation. Big guys are going on vacation with very large pockets.
Gets worse.
Right. Right. And so the liquidity that we're accustomed to in the middle of December, or not December necessarily, but in the middle of October, for example, really, really great year from a volatility standpoint over like historical time periods. Right. Those same people are on beaches in Bermuda, and they're not trading from their phones like a lot of YouTube videos would say. They're spending time with their children, right? So it's harder.
They've left junior traders behind at the desk, and they sit there before they leave to go, if the market does this, you push that button. And if the market does this, you push that button. Oh, guys, don't touch anything.
Exactly. So what are the rest of us left with? We're left with crumbs relative to the big juicy steaks we're used to.
Yeah, and like you and I were talking the other day, Aaron, it's just we've got to recognize when the market or when we are in that environment in the market, and that's as critical as having a good trading plan. But you got to be able to identify when is the market not conducive to my strategy. You need something that identifies that issue, and I think that's pretty important too. For me, it's just looking at a daily chart, and one of the things I'll take a look at too is if you take a daily chart or even a weekly chart, and you get one big candle. And what's ironic about that is if you go back and look, sometimes you get 15 or 20 days that might wick outside the high and low of that one candle, but it can't close outside of it. And when I see more than 3 days closing inside of one previous candle, right there tells me we're getting ready to start another sideways or choppy market. So I wait for a close outside of it to finally confirm, okay, the market wants to go. I don't get in at that point, but at least it lets me know the trend is either going to start to go up or down. But I have seen that over and over when markets close inside of a previous candle for at least 3 days or more, it usually turns into really bad slop, choppy stuff.
That is interesting, my friend.
Yeah, go back and look at the chart. Just that over and over. It's a pattern where once you see it and there's 3 days into it, and you're like, I'm not touching that market for a while.
That is fascinating, my friend. Jordon, I know that, Don and I, of course, we mostly trade futures. I've been experimenting a little bit with equities as this market's been so choppy. Have you had an experience like that when looking at these Forex markets? Have you seen the same kind of seasonality?
It's definitely a Forex traders market right now. The big talk is interest rates, inflation, and politics, right? So when you're looking at global currencies, volatility is incredible. It's where you want to be. Now, while that's giving more of a risk-off sentiment in equities and futures, people want to go away and kind of stop or slow down a little bit. Well, when they sell all of their equities and futures, they're buying back cash. And a lot of people are holding this cash and then looking for the best economies to keep their money in the bank accounts, especially with interest rates going all over the world. So you're actually seeing a fair bit of volatility come through in the FX market during these times, which is good, right? Which is real. Now, FX markets are always going to be volatile. The businesses are still doing deals. International business is still going ahead. So I haven't seen much of a slowdown, especially around these interest rate decisions. The CPI, we've had CPI and PPI 2 days on the trot for the US dollar the past few days. US dollar has been absolutely moving like there's no tomorrow. We've seen a lot of traders capitalizing on some of these big moves that we're getting in the FX market. So no, it's been quick. It's been quick in our market.
Yeah. It's funny when you mention that about the dollars, because I got a daily worksheet that I fill out every day before I start the day. So I got about 14 markets that I follow. So I go in there and want to have them all sort of itemized and where I would get in, stops, all that. But down at the bottom, I've got kind of a little blurb part I can put in there. But one of the things is daily trend of the US dollar. and I go in and I'll find out, okay, what's the trend of the daily on the US dollar? And then also I put under what is the seasonal pattern coming up for this week for the dollar as well. But I found when the dollar is in a sideways trend, so many other markets are in a sideways trend too. And the dollar had been just literally chopping around like this in the last, like I said, 3 or 4 days. We're finally starting to see some hard selling coming into this market. And so when that happened, look at all the other markets that have started to, start moving more of a risk on. It actually starts to come back into play when they see the dollar moving like that.
I think what's also important to understand as well is I trade the exact opposite to you two. Right, you two want a trending market, you want a moving market. Right. I love a ranging market, right? That is my bread and butter. Put me in a range where people are getting impatient and they're still going to pull the trigger because they can't not. That junior trader, the boss has told him, don't press the button. You know he's going to press the button. You can't put a big red button in front of him and tell him not to press it. Those are my markets right there. That's where I like sitting. So,
that case, are you taking? Oh, please, Don.
No, go ahead, Aaron. Go ahead.
Oh no, I was just going to ask really quick this because I get so curious when we talk about this. So most of my losses historically are in ranging markets, sideways markets, right? Most of my money is made when we're trending specifically, right. So specifically to the downside. Historically, I've done really well to the downside, just shorting. But in that case, Jordon, when you're looking at your stats for your trading, are most of your losses or most of your drawdowns in periods where there's more trending markets, or does that have a role to play in your drawdowns at all?
As a holistic view on a longer term, no, it doesn't really affect whether we're in a really volatile market, whether we're in a really rangy market. The way that I trade, so scalpy, right, and it's really accustomed to like a 3-day period. That's really all that's relevant. The only big losses I get, or the ones where I do have bad days, is where we have continual day after day just pushing, right? Which some of those days, and I'm sure you can literally picture the candles in your head where we go a week of just nonstop bull running, which is a little bit like, hang on, this doesn't usually hit. It's only those days that I really find some losses, but I find that I've gotten pretty good at cutting those losses pretty quickly, and I can find opportunity elsewhere. Being in the FX world, we're trading two assets against each other, and I can just move over to two completely different assets where the opposite thing is happening and capitalize on opportunity that way.
Right. And I do the same thing. That's why I got about 14 markets that I follow, different futures markets that I follow. And it's because there are certain markets like energy, right? For crude oil right now, I won't touch that with a 10-foot pole. It is so choppy in there for basically all 23 in that market. And so if I was just trading crude oil, I probably wouldn't have any money left in my account because of how choppy it's been. But if I got other opportunities out there, that's where I go fishing at. I just sit there and go like, hey, you know what? Oil's not doing anything, but look at that trend in the pound dollar right now. That's been a really good trend. The grains were doing really well until we got around Memorial Day. We had that sort of a drought scare, which lasted all about 3 days. And then all of a sudden it fell apart again. But anyway, there were some good trends in that. And my spreads were trading really well. Nice trends in that. That's one of the reasons I like about spread trading is they're more trendy than even the outrights are, because that's the purpose of it. It reduces the volatility in trading. So those were doing well. But now in the last, say, several weeks coming in, I would even say since Memorial Day, coming into the 1st of June, a lot of our markets have just been sort of choppy and going sideways in a longer time frame charts. I can sit there and look at some 30-minute charts. Just, I go like, something's got to be moving. I just want to see a chart that's moving, and I'll open up an intraday chart and go, oh, look at that. I'm not trading it, but look at that. When you look at dailies and weeklies, and it kind of looks like an EKG. Just sitting there going like, is this thing going to make it?
I feel the same way. Every once in a while, I'll look at a biotech stock and just go, wow, and then close it, and then go back to the charts, right?
Yeah, that's a good thing about not having your order platform open when you're browsing.
Right. I have no crypto accounts. I have no way to trade crypto. By God, do I love watching? It's like it's better than most shows out there today. Just seeing the volatility moving all at once. I don't know how anyone trades it.
so difficult as I am transitioning more into longer term positions. So I've not hit the middle ground yet, right? I'm either short term, I'm closed within an hour, that's my trade done, or I'm closed within 10 years. There's no there's no middle ground right now for me, right?
That's the first. Let me tell you.
Yeah.
10 years.
Yeah. So I'm
Wow.
starting to branch into that. Okay, let's have a look, see if we can outperform the market. That's my whole. We spoke on this plenty of times to the both of you, right? If I can't outperform the market, my money's better in the market. Simple as that. So as I'm starting to branch into having a look at swing trading, into having a look at different assets, into commodities and into equities, it is patience testing for me because it's that element of I can't completely forget about it like I do in my long-term portfolio. I still need to be very aware of what's going in day out. But I'm also sitting there looking at it every day. It makes me want to act on it because I'm used to being in and out. Exposure overnight is not what I'm used to. And it kind of beats me up a little bit. I think that's the biggest fault I see in myself, looking to more that swing trading as of right now. And as I said, everything's all just about outperforming the market.
That's one thing I like about when you're trading longer term. It's a good tutor for me on my short term trading, and for me, short term is overnight trading still. But I use it for like this example, and that is if sometimes if I get into a futures trade and it's like there's like let's just say I'm in an Aussie dollar or something, and you guys have a report or something like employment or an interest rate change about 2:00 in the morning my time, right?
Yeah.
And some reason I wake up at 1:45, right? And I'm laying there in bed and I'm thinking like, should I go down and watch this? And now what I tell myself, I should say now, but I mean, I've learned over the years, I actually say, look, when you wake up in the middle of the night like this, do you go down and check your investments? I mean, right? Because that's long term. It's like, I nothing I can do with it. And so I said, why do you go down here and check this position? Because again, what can I do to it? Once you're in a trade, I can't do a darn thing to it. Your stops are in. If you have a target that's in there, there's nothing you can do. So it's kind of like, don't go down there. Because if you go down there, it's a 2 or 3 hour morning, just going down there and taking a look at that. So, and you could end up tinkering with it, moving a stop, moving a target, because you start thinking. And that's probably the most dangerous thing you could do at that time in the morning.
I think it's something that comes with time as well. Because when I started building my equity portfolio, that long term, I would still refresh every day. I'd look in and be like, oh, what happened today? I'm like, it's not going to make a difference. Now I check it every 5 months. I'm kind of like, oh, yeah.
Right.
It's kind of that you get used to it over time. And I'm assuming getting into swing trading is going to be very similar. I've done it before in the past. But when you've gotten so good at a skill, that's pumping my own tires here. I don't like the way I've just said that. But when I've honed in on that skill and I'm able to extract money from the market, day trading, trying to transition when you've got an edge into a market where you don't have an edge is always a great battle, which I'm actually enjoying, believe it or not. It is an interesting thing to undergo.
Yeah. 100%. And I think that there's real value to that too, though, Jordon, because like Don was saying, oftentimes the traders that perform the best have those different streams of income coming in. So although you are, yes, profitable in day trading now, you and I, we haven't been trading nearly as
now.
Right. Over the past few years, right? We don't have nearly as much experience as Don does, but as every trader will until the end of time, will go through drawdowns, right? So it's so advantageous to have those different things working for us where, man, I may have had an absolutely garbage day trying to trade crude oil because we've been just sitting on the lows for what feels like 18 years. But I have a couple of swing positions that might be doing really well on the 10-year or something. And so that, I think that also helps with the mental capital as well, because if you're just trading and you're just a trader, that's all you're doing. You're trying to bring in bacon for tomorrow. If you're really focused on those things, then if you have a bad day, chances are everyone in your household has a bad day because you're sulking on that thing. You're meditating on it. But if you have other things that are working for you and you had a bad day in this particular market, but you have another trade that's doing well or investments that are doing well, it again takes that edge off from you a little bit, because you don't have to perform to your best today. You don't have to score 56 in order to win this game. There are other players that are working here, right?
Yeah. It's a parallel to people who buy and sell individual stocks, as opposed to somebody who buys and sells index funds, right? If you're buying an S&P 500, there's 500 stocks in there, or NASDAQ 100, Dow's got 30. But if you buy a stock, it better go up, right? Because you don't have any teammates. It's just you and that stock. But that's what I like about for long-term stuff. That's what all my retirement stuff I do is always on index funds, and mostly it's S&P 500. It's one of the most widely watched around the world and the most liquid of any index I've ever seen. So that's the one I like to sort of dabble in. And you were talking, about sort of gauging how you're doing in your trading, but I like to use markets like that as a benchmark. For example, with my trading account, you'll look at it and you can say like, okay, so for the quarter, the S&Ps were up 6% or 5% or some number like that, whatever it was. And if you get that kind of a number, you sit there and go, okay, how's my trading doing? And if you start to see that you're not consistently at least tying that, you should probably have a bulk of your money in an index fund somewhere until you can start. I can't say you're going to beat it all the time, because nobody beats the market all the time. But to be somewhere near average with that, I think you're doing pretty darn good. But at least it's a benchmark, as opposed to gauging against how another trader is doing, like a friend of yours, or you've seen somebody on Twitter and all they do is post their winning trades. You don't know what they're posting on there, right? So the point is, you don't want to ever sort of talk about or compare yourself to another trader, because we're all very unique in our trading. But if you can pick out like an index, or even a T-bills, for example, I used to use them years ago when they were like 11 and 12%. But then when they went down to 0%, it was kind of like, hey, this is easy. I can beat that all the time. So, well, kind of. But anyway, now they're back up in the 5s and 5.5%, so that's a pretty darn gauge right there. And right now I do. All my retirement stuff right now is still in that. I'm getting my monthly is finally, like today, finally gave a twitch up. If we close above this now for July, I'll be ready to get long, I guess, back in the market. I don't want to, because I'm still nervous about this market. And I hate talking like that when I'm a trend follower, because that shouldn't make any difference how I feel. But when 8 or 9 stocks caused 20 of this 25% rally right here, I sit there and be like, when's the bottom going to fall out? At least back decent correction and then get back in the market or something.
I was going to say, when you're heavily invested in the S&P 500, I'm just going to say, do you mean the S&P 7?
Yeah, well, I think you're right.
Exactly. It's a little. It is a little scary. I talked about it in another video, but with the NASDAQ rebalancing, it's really scary looking at the figures. So the Magnificent Seven, those being Apple, Amazon, Microsoft, Google, you guys know the names, Tesla, Nvidia, those stocks year to date, I believe they're up 53%. And, it's astounding, because you look at like Tesla alone is up 112%. Yeah. And you have a lot of these stocks that are performing in this way.
That's
all it takes is one. That's the benchmark. If you're not hitting 112%, you're doing something wrong, right? But the reality of it is, these with heavy swings like this, there's always some kind of reckoning. Now, of course, there are exceptions to the rule, but I guarantee you're probably not the exception, right? It's much more likely that you are the rule as opposed to the exception. So I totally agree with you, Don, because it's so disheartening to see so many people on Twitter or so many new traders hop into this thing and think they're going to make 20% every day on their account. It's so hard to do that. Look at the best hedge fund managers. We all talk about Cathie Wood and the incredible things she did. There was one year, I believe, she made 176%, and then the next year she lost 3%. Like that. Like that's
her fund is down like 40, or was down 40-something%, wasn't it, or almost 50? So
to date, it is. To date, it's down a little over 40%. Yes, and so it's crazy to talk about it, because we talk about her like she's a genius, which she is, but she's still first and foremost a risk manager, and it's difficult.
That's not a very good one. But
if I had my money in there and I'm down 50%, I'd be going like, I calling her anything but risk manager.
And Hence the craziness, because first and foremost, as a trader, you're supposed to be a risk manager. You're not supposed to take on these
Right.
crazy losses. But because she's trading with other people's money,
Oh, yeah.
she's totally cool.
Yeah.
I would be too, making her salary and still being able to trade this incredible fund down 40%.
Still throwing money at her. That's the scary
Still
part.
throwing money at her. Yeah.
As someone that's dabbled in fund management, I don't know how she does it, because I was so much more conservative with other people's money than what I am with my money. If it's my money, sure, let's take a bit of risk. I know what I'm doing. If it's someone else's money, I'm like, no. I'm like, I don't know how to do that.
Right. I'm in the same camp there. Yeah. I'd rather lose my money than someone else's. So,
absolutely.
Oh, 100%. The best I could do is be like, hey, man, we put all of your money in T-bills. You made just under inflation. I'm sorry. I did what I could. I did what I could with it.
Yeah. But I tell you, when that market's turning down and you got, the stock market's down 20 or 15% or whatever, and I'm sitting there counting up my little 5.5%ers, I'm going, I like this. It's kind of like you look on your account, you see all your little dollars are still with you, and it brought some of its friends along.
I can just picture like a little animation of all these little T-bills walking through.
Right. I'm very passionate about my money. Because I always had that philosophy even growing up. I said, I don't want to work for my money. I want it to work for me. Right. So I used to joke about how it's like every day I would send it out to go bring some of its friends back. I said, some days it comes back and it look like it's been into a street brawl. Its ears hanging down, its nose is all bloody. It doesn't have any of its friends with it. And other days it comes back, it's like you got to open both doors to let them in. You're like, come on.
There's plenty of times I've done that and it's not come back. I've never seen it.
The line broke. The market ran off a bit. and that's the beauty of it all. There's so much that goes into creating a successful trading career, and losses are just kind of like this step stool that you stand on. The tuition that we pay to the markets, it gives us so much in the way of education and knowledge.
And even though the way we handle it after you've been doing it for a while, you're a little calmer about it, but we still don't like them. Even one, it's like, what? Man. And you got to smack yourself in the side of the head going, it was one trade, Don. My God. I said, you'll spend more than that on wine than next week or whatever,
I think what's really good as well is obviously we've done it, and we've between the three of us, we've seen a fair share of losses, which would make someone's blood boil, I think. And the beauty is, and this is a lesson within itself, if you guys watching at home haven't picked up on it, we're laughing about it. And the reason we're laughing about it and we're kind of talking through it this way is because it happens. It's not something you're going to be able to avoid. Yes, it sucks, but you've got to also enjoy what we're doing, right? We enjoy trading. If we were here not enjoying this conversation would be very different. We would be very somber. It would be very upset. And we know that over the next couple of months, we're going to have a few more losses. All right, we're aware that's going to happen, and we sit here well and truly knowing that we're going to lose some money at some point. Yet we still perform and we still push to do it, and that speaks volumes in itself. It's part of trading. It's what you've got to go through. It is what it is. I mean, I know a few people that avoided it. They're no longer trading anymore. I don't know what happened there, but those guys that seem to have 100% hit rate just disappeared. I don't know what it is. Whereas personally, I think you've got to have a bit of a laugh about it, which is a good thing about this conversation. And TradeDelicious is a little bit more lighthearted and how to deal with these things. It's important.
I think it's something that helped me even in 2021 is, if we have a backstop in anything we do in life, meaning we kind of have an idea where it's going to stop. In other words, we can put a buffer in there that says, I'm not going beyond that. You know what I mean? Mm-hmm. So in trading, we don't know if every one trade or not is going to be a winner or a loser. But what I use for a backdrop on something like that is, when do I stop trading in the sense of, over a longer term? And I use something like a 10 to 12% drawdown in my account. And if I hit that, I know in my head, I am shutting the platforms down, charts are down. I'm going to take a few days off, and I'm not going to trade for several weeks. I am going to come back and I'll start going over what's happened here, what caused me to hit this level. And then, and if that tells you, I didn't even hit that one out in 2021, but it was still red. It was just a sucky year.
Right.
But I knew in the back of my head, I think that's why I kept going so long, because I knew in my head I wasn't going to blow my account up. I knew that if I did hit that number, that what I call financial house circuit breaker, I knew if I hit that, I was going to stop trading. I've got that discipline. No matter how bad things are, I know I'll stop.
I've got a question for you.
I'm writing that down.
I'm gonna run a scenario for you, and I'm curious to know what your process would be in event of this scenario. Okay, you've got a hard stop 10%. That's you've done it. You've hit it. It sucks. You've gone away for 2 weeks. You've reset. You've hit the gym. You've come back absolutely buff. You're getting back into. You're getting back.
Younger days.
You're getting back into trading. You continue the drawdown. What's your process?
That's, I haven't experienced that. And so I can't even, I'm not going to speak from experience on that, but I'm just saying if I had done that, I imagine I would probably, after say 5%, maybe even 3 or 4, I would probably pull the plug again and go like, okay, something's not right here. Because before I would come back after that drawdown, it would have been plenty of back testing, and maybe even some forward testing just to make sure. Because if you're out in the market, like you've been, Jordon, for a period of time, what's the new market environment, or has the market environment changed since I've gone out of it, right? So that's why I like back testing combined with forward testing as well. So if I can get the back to, you've already come up with what your edge is, and then forward simulate a little bit after, say, that 10% area, that is going to give me that confidence to say, okay, I think I'll be okay. But if I do come back and we're still doing maybe 3 or 4%, I'd probably be pulling the plug again and going like, okay, I'm going to McDonald's at work or something. But I don't know. Me, I don't think I would take that to another 10% on that quick. If it was years down the road, of course, it'd be, that 10%. But I don't think I would let it go that far coming back right after hitting that circuit breaker like that. So is there something either with me or, maybe I haven't healed from that, 10% drawdown and I'm doing stupid things again, trying to catch up or whatever it is. So obviously looking back over your notes about like, have you been following your rules? Have I been taking excessive risk trying to play catch up? What's been my environment, as far as that going on? So
good answer.
Thank you for that, my friend. And like you said, I think I really want to stick to something you said there. Your environment plays such a big role. I think that's something a lot of traders missed, and I definitely missed a few years in, where I was thinking like, why is my trading plan not working? It's flawless. I know that if I lose 2 and I make 1, I win 1, then I'm profitable, right?
Yeah.
Well, if there are other things playing a role, your surgery, for example, if you're having difficulty sitting at your screens for 5 minutes and you're in pain, that's going to cause some kind of issue somewhere. And it'll be no wonder if you're losing more money if you can't put all of your focus there. So if you're in pain, or if something's going on at home, if your dog just bit you or something. Before this call, I was wrestling with my dog and he stepped on my eye. It's not a really good time to trade right now, right? He got me in a really precarious position, gentlemen. He won that fight.
I thought your wife could snap because you didn't buy her that car she wanted.
The beauties of being a newlywed, right? But those things, they all play a role into those things. After being beat up by my dog, I'm not going to jump into the markets to get beat up by the markets, right? So there has to be a level of understanding of where you're at in your life as well. And so
that is probably one of the most important things. I mean, there should be, if you're a day trader especially, you should have a little checklist you go down through in the mornings before you start your day, asking yourself, do I have any of these roadblocks, that, could give me problems today going on before I start my day? So
100%.
Yeah, swing trading. It's one of the things I like about swing trading is because as a day trader, and you guys can probably vouch for this because you've been day trading, more recently. But when you're day trading, you've got to be on your A game every day you come in, right? Because you got to find new setups, execute the plan, and be able to manage the trade as well every day. And Matt, is that asking a lot for us to be perfect every day?
It's easy for us, Don.
Jordon, he's just no problem. Perfect, right? Aaron,
No
I know you're
problem.
like I am. We're so far from perfect. It's not even funny, but
It's crazy. It's just, I just, yeah,
No,
yeah,
no,
yeah.
it
if you
is,
think
but
about the swing trading standpoint, what I like with that is what I got to be on my A game is Sunday. And that's my chart analysis for the upcoming week. And then during the week, it's pretty much just, if I'm in a trade, it's moving stops, like trail stops. That's it. And I can come in either hungover or I haven't had my coffee or my dog bit, whatever it is. I could come in and move that stop without thinking too much, right? But if I was a day trader and I had to build something every morning when I came into trade, I would find it hard for me to be on my A game every day like that. I mean, think of a cold or whatever.
yeah,
It could just make you feel like crap. And you're like, man, I'm just going to have a rotten day, I can tell. So
I
if you
found.
get, walk
I've,
away.
Yeah, I found personally over time. I mean, you get into a routine, right? You trading, especially when you're doing it day in, day out. Your routine is there, and there's little things like obviously, as a day trader, it doesn't necessarily mean I'm trading every day. If the opportunity is not there, I'm not going to execute. So there is that aspect that I'm not always trading every day. While I'm watching, it'll take me, much like you, 5 minutes to look at the charts that are there, and I'll tell you whether or not I'm going to have a trade that day. Does
Yeah.
this fit? Like, and over time, now beginners won't be able to do that, right? But over time, I've learned exactly what I want to see. Someone can show me a picture of a chart, and I can tell you whether or not I'm going to trade that today.
There you
So
go.
there is that. So even if you're having a bit of a cold or you've just woken up on the wrong side of the bed this morning, there's a chance you won't be performing anyway.
Yeah.
I always liked, I believe it was Jared Tendler's book, talked about the inchworm effect, getting your A, your B, your C, your D game, and then slowly upping it to the point where your C game, which it's not that great, but it's still profitable, even if you're trading on your C game. And I worked really hard to get that. So on my A game, I'm full risk. I'm having a great time. Life's great. Happy days. On my C game, those days where I'm like, okay, I'm not 100% in here. I'll reduce the risk, but I've found over time I still have an edge in the market. I can still perform. And then, there's some days I wake up and I go, I'm not even going to look. I don't want to touch it.
Yeah. I think trading maturity brings that about a trader, that they recognize themselves before they come into the office that day of, should I be here or shouldn't I be here? Or if I am here, let's just back off on the risk a little bit today. Or even worse is if you've got something is scheduled, let's just say it's 9 a.m, but you've got a 10:30 meeting or a 10:30 appointment somewhere. Imagine that hour and a half of crunch time pressure you're putting on yourself. You got to get in the trade, right? And you're probably not going to get on it right on the open, but you get in it, and now the clock is ticking. It could be profitable. It could be a losing, especially if it's a losing trade. It really works on you. Go like, what if it doesn't come back before 10:30 when I got to leave? What am I going to do? All this crap's in you. You might as well kiss that money goodbye because it's not going to work.
Yeah. And to follow on from that, which is the perfect example of why multiple incomes works. Because if you are tight for time or you are under that pressure, you don't have to execute. You can take a step back because everything else is sorted. You don't have to worry about pulling that trigger. If you're a full-time trader and trading is the only income you have, you're going to be under pressure to perform and pull that trigger, and you're going to get yourself stuck in a hole. If you can go to that appointment a bit later and be like, okay, I missed that opportunity, but it was the right decision to make. I can still pay my bills. Happy days.
Or you could be a swing trader and you just put the trade on and go to the meeting, and you don't have to miss that opportunity. I'm just saying.
All right, start the debate. Come on.
There you go. Gentlemen, I think that is...
I was going to bring one thing up, Eric. When you were talking about, I'll make it quick, but you were talking about the NASDAQ that week you had, and it's just going like, man, I was like, I'm walking on water type of a thing, right?
Oh, yeah.
One of the things I used to tell my student about was to figure out how much capital you need in your account each month to trade, right? In other words, I call it a bare bones minimum in there. And then at the end of the month, and you don't want it so that every tick goes against you, you're sweating bullets. You want it to be comfortable, but you don't want it to feel like there's a slush fund of money in there, right? I'm just saying it's really working capital. Because what a lot of traders do is once they start making money and the account starts to grow exponentially, like what happened to you, or other traders do the same thing, when that happens, they start thinking like it's house money. It's not really my money. all they see is the 5,000 they put in the account to start with, even though it's at 15 or 20, right? And now it's house money. Oh, I don't get. That's when I always joke. I said, I tell my students, I said, they start using an indicator called stochastics. They don't even know how to spell it, much less use it. You know what I'm saying? Just because, I got the money, who cares? So
right.
The key on that is knowing what your bare bones, how much do you need each month to trade? And then at the end of the month is to sweep any profit above that back down to that bare bones at the beginning of every month. What that does, it forces you to make that very first trade of the month, just like you're starting over again. You don't feel like I've got this slush of money rolling around. I can just sit here. I don't care. I was just $100. Oh, that was just 150. Yeah, and because those little things at the end of the month, they will get bigger and bigger and bigger. So, but the point is having 100%. That number especially as a day trader, I think that really plays a big role. So if you just don't get careless with your money, and the key, what I found when I was doing that was taking that money out and not going out and buying stuff with it, but literally sticking it into a savings account that could easily be wired back into my account if I was holding a position overnight, needed more margin or whatever it might have been. But the key is it was still trading capital, but it wasn't at risk in my account by leaving it in there. And that really helped build up some money as well. So
thank you so much, Don.
Look at it back.
Yeah. The tuition, right? Gentlemen, I think that is the perfect place to leave off on. Thank you so much for your time, traders. We hope you enjoyed everything that we presented here to you. Please like and subscribe for more content like this. As always, please trade well and trade delicious. We'll see you.